What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only NIO stock and why tomorrow is going to be a very important day for the markets in NIO. Because if you look at what's coming out, we have CPI. So we're going to break down the CPI expectations, how this may affect NIO's share price, and why tomorrow is a very important day. I also have some very good news that came out on NIO's Twitter page, which makes me very bullish for its long-term future. But for the short term, we could see some very volatile price action. Now, before I break down anything about NIO, why on earth this thing ended up dropping the way it did today and what will happen for tomorrow, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 10 free stocks, each worth up to $2,500. You could always sell these 10 free stocks for cash and use that cash to buy some NIO shares. The best part about these 10 free stocks is 5 are going to come from the wheel right here, which means you could win 5 free AMC shares, 5 free Tesla shares, or a mix of all of them. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So NIO is down 4.96% for the day. I did predict NIO would close a little bit in the red, but I thought it would actually hold up a little bit better than this because of how it ended up moving. But I also mentioned to you guys that if NIO ended up kind of breaking out of this range that it was in for quite a bit of time, if it broke below 19.5, right, that was the key support area. It kind of extends to like 19.44 to 19.5. But if we broke below that, the next key support zone, I actually highlighted this yesterday, was $19 flat. So we ended up bouncing off 19.01, very, very close to what I told you, but I didn't think it would drop this hard, but it ended up doing that, so it is what it is. So I want to talk about why it ended up dropping this way. So tomorrow we have something very big coming out for the markets. We have the CPI report coming out at 8:30 a.m. Eastern time. So remember to mark your calendars right before the market opens. We have CPI coming out. And this is going to be very important for NIO and the markets because what is actually reported is going to affect how NIO moves, at least to some degree. If we have really good CPI, there's a chance NIO could actually rally if the market does rally over the next couple of days. If CPI comes out as just average, the market could really go either way. And if CPI comes out bad, it's very likely the market's going to take a hit. I want to actually go over this with you guys now. So looking at CPI right here, the U.S. Bureau of Labor Statistics, they're looking at it right over here, and they're expecting, many economists out there, they're expecting that it actually decelerated from 9.1% to 8.7% year over year. So the last report that came out, I'm sure you guys remember this, was 9.1%, and many big figures like Elon Musk believe that was the peak, and now they think it's going to be 8.7% overall. Now, another thing that's important is core CPI, right? That's excluding food and energy. They think it's actually going to accelerate from 5.9% to 6.1%. So not necessarily the best of signs. So I want to actually now talk about this in more context and how this could affect the markets. We could see overall, food and energy, when you exclude them from a CPI, we've been on a downtrend. But if it does increase a bit, that won't be the best of signs. But if overall CPI does end up decreasing, there is a chance the market could actually respond positively. So this is basically what inflation's been doing over the last like 12 months. You could see it's been going up and up and up and up. And right here, people think this should be the peak. So I'm really hoping for that. So with that said, what should we be expecting? Well, if we look at energy prices, right here, we could see the price of retail gasoline on average across the USA was $5 for the month of June. For July, it went down to $4.69. So right here, you could see as 67 cents, sorry, $4.67. So it decreased from $5 in June to about $4.67 for July. So this decrease does increase the odds that CPI won't be as bad, but then you have to account for other things that could affect it as well. So right now the markets are becoming a little bit bearish. They're starting to price in at 175 to 100 basis point rate hike. It is very possible we get that, but we'll have to wait and see how CPI really goes for us to really determine how this all plays out. So I have this right here for the CPI report. All right, core CPI also matters, but I want to just talk about the main number. If we get anything between 8 and 8.5%, that would be pretty good for the markets because that's going to be lower than the expectations, and it would show that CPI is starting to come down. Because if you look at the trend, Like right here, it's been going up almost every single month. The only exception would be like right here in April, but every month it's just went up overall. So if we get a big decrease and we're in the low 8% range, the market's going to like that most likely. We could get some nice moves. If it's anything like 8.6%, 8.7%, which is just what the expectations are, it would be okay. I don't think it's going to affect the market as badly if we meet expectations. But what if we get 8.8 to 8.9% for the overall CPI report? That's including food and energy. That would be pretty bad because it would be higher than expectations and very close to what we got last month, which was one of the worst months for CPI of the year, right? And anything around like 9 to 9.1% would be bad, very bad, in my opinion, because it would just show, okay, is maybe CPI did not even peak yet, and markets would not like this. We would expect a big crash if we get something like this. And the worst thing that could happen is anything above 9.2%. Because remember, 9.1% is what we got last time. So 9.2% or higher is going to be absolutely horrible for the markets. All right, so be ready for that, be prepared. And I want to talk about how on earth this could affect NIO. So I don't really have any real price prediction to give you guys because it's dependent on the data. It's going to have a big effect on NIO. So here's what I want to do. I want to go over support and resistance levels. All right, let's go down right like this. If NIO drops down below 19, it could get a bounce, maybe some of what of a bounce off 18.75. I don't think it's going to be that strong. The stronger bounce or like the stronger support area is going to be right over here around 18.5. So 18.5 is the key zone to look out for. If that doesn't hold, this thing has the potential to go down to 17.8. So it could make a big drop if CPI is really bad and the market does crash. We'll have to wait on what the data says before making that claim though. If NIO does rally, if the market pushes up and NIO does decide to push up, 19.5 is going to be resistance. We could actually break that quite easily. We were there for quite a bit of time. And if we break that, then 20.2 and then 20.8 are going to be the key resistance levels. So keep those in mind. You can mark those if you guys want. And with that out of the way, I want to end the video now by talking about why on earth it's not the end of the world. Because right now, the markets it's still in a mess. I mean, we're still dealing with the recession. It's a very strange recession. And a lot of people are they have these different sentiments, right? The market's kind of neutral, but now it's becoming kind of fearful. So right now, things are hard. The long-term future is still very bright for NIO, though, because they are working on expanding their business model. They're working very hard, and I really think that the long-term future is going to be very bright. So if you look right here, a NIO ET7 was actually spotted mapping Czech Republic, pointing to a new market in 2023. In my opinion, that's going to be absolutely incredible if they really do make it all the way up to Czech Republic. When we see new markets, it's going to be bigger for them because it's going to increase their deliveries, it could increase their exposure, it makes their brand better. And to me, that would be absolutely incredible. So I do see them actually doing this for the future. Amazing, amazing piece of news. I really believe that they have something big in store. And the last thing I want to talk about is this right here. NIO Global liked this post right here. Someone basically replied to them and stated, looking forward to this horizon shot. And my point is, NIO is liking this. So there's actually a sign that NIO may be entering the American markets relatively soon. So be ready, guys. Eventually, the time could come. That could be very good for NIO, their business model, their price action. So there are still many bullish catalysts for the long term. For the short term, yeah, it could be a little bearish. It depends on CPI. So be on the lookout for that before the market opens. Once again, at 8:30 a.m. Eastern time, which is 1 hour before the market opens. Be ready, remain calm, cool, and collected. And just know, despite what happens for the short term, the long-term future is still very, very bright. With that out of the way, thank you all for listening. Have a great rest of the day, and I'll see you guys in the next video. NIO to the moon because the long-term future is bright, and peace out.